And we've got a geologist coming up here in a few minutes to talk more about that. But let's talk about the investing side of the scoop stack story. Joined by Kate Richards, CEO of Warwick Energy, born and raised here in the Sooner State. What did we screw up? Did we get everything right in that package?
Well, you didn't get right that prices are rising. We've actually seen CapEx fall significantly over the past 2 years. And
even to buy land, though? Because that's what I meant. If I was going to go buy land, I would have to pay more.
You can't buy any more land. It's all leased up. And that's why
Well, everything's sellable for a price, so we were correct.
You could buy a company, but you can't buy land. There's not unleased land. If you want to get access to drill oil and gas wells, you have to go buy one of the companies. There are a few private equity companies that have assets in the area, but mostly it's the big five, and those are the ones that you mentioned, Continental, Devon, most.
You know, I'll knock my own industry here for a second, because they say when the media shows up, it's over. Like, we're the peak always, right? That's sort of the joke. Are we the peak? Is today it?
I hope you're not the peak. I don't think that you are, because, you know, these are the lowest cost break-even plays in the country. These plays make 10% rates of return at $30 oil. So they make a lot of money at 60.
Whoa, back up. 10% invested rate of return at $30 oil?
And how long was crude at 30? Very briefly. So if you look at crude and you see that it's ricocheting between 30 and 60, but really stuck in a band between 40 and 50, the way that we really believe investors should look is we need to make good rates of return at 30, and that way we'll make very nice rates of return at 60. What you don't want to do is go into a play like the Bakken or some of these higher marginal cost plays and need $60 oil to make sense. You need to make good money at 30, because then you'll make very good money, 20% rates of return in the 40 to 50 band, and 30% to 50% rates of return in the 60 band. And that's why we just focus on the scoop and the stack.
And what I've learned about the industry through you and some others, which is you're a non-operator. That's what they call that. So you don't go out, you're not getting a rig, you're not drilling down into the ground. Your firm, Warwick Energy, invested over 4,500 wells. What I didn't realize until recently was that, yeah, Chevron or whatever may own a well, but then you've got a bunch of other players who own a piece of that, and that's what you invested. How much can you make on an average cost well at $45 a barrel?
You can make a 2 times return and between a 20 and 30% unlevered return.
How is that possible?
Because your CapEx is about $8 to $10 million in these wells. And if you look at your cash flow over time, you have a huge amount of crude and gas coming out of these wells and very low operating costs. So one thing that's very important for everyone to understand about the scoop and the stack is it's low cost. It also doesn't produce much water. And water is what is related to earthquakes. You're talking about that later on. But the scoop and the stack produce very, very little water.
Well, where has it been? I mean, you know, maybe this is our fault, Kate, but I mean, we've talked about the Bakken, we've talked about the Permian, the Eagle Ford, and all these other Delaware Basin, Mississippi Lime, whatever. Why haven't we been talking about the scoop and the stack? Where's it been? Is it that new?
It is new. There are new plays. There are 1,300 wells that have been drilled in the scoop and stack. The discovery was over the past 3 years. I think oil and gas intelligentsia and investors are certainly aware of the scoop and the stack. You cannot read a morning equity note and not read about the scoop and the stack, and that's been true for a year. But it hasn't hit the big national media. And I think one of the reasons for that is that it's only 5 big public companies that are really involved.
Well, we're here now. Kate Richard of Warwick Energy, thank you very much. We've been reading our equity notes, Tyler. I know you've been talking about the scoop and the stack for years. We finally made it out here. So Tyler Matheson, there you go. You can make a lot of money at $45 a barrel, just about 35 to 40 miles north and northwest of here.
All right, Brian, thank you very much. I am educated now on the scoop and the stack.